Hello friends, thank you for tuning in to the official YouTube channel of AshEka Financial Planners. I am Sandeep, your personal financial planner, and I regularly upload videos on personal finance. It is my sincere endeavor to make it very informative, make it very relevant, and make it very simple to understand for you. Before we head into the topic of this video, I request you to subscribe to my channel and to also hit the bell icon so that you would be informed every single time I upload a new video, and this is the least you can do to support me. So thank you for subscribing. In today's topic, I'm going to be talking about home loans and why you should not be considering prepaying them or pre-closing the home loans. Quite often you get a windfall, maybe a bonus in your company, maybe an inheritance, maybe a big ticket business deal, and you're tempted to pre-close your home loan because you have the funds with you. Well, it may sound interesting and exciting to do that, but it may not be the most sensible thing to do, and I have the numbers for it. So I request you to have a look at the computer screen and I'll explain that to you. As in my previous video, let me assume certain amounts. Let's say you have a home loan balance of 20 lakh rupees. The current rate of interest is around 8.3%. And let's say you have 15 years of your loan tenure left. So what is the interest that you would be paying over 15 years? This is the amount, 15,02,985. That's 15,02,985. So how much interest are you paying per year? So 15,02,985 divided by 15 would give you an amount of 1,199 per year. And what's the average interest percentage? So 1 lakh divided by 20,000 into 100. That is the per year interest that you're actually paying on your home loan. It's just 5%. Now you must be wondering, I was told it's 8.3%, and how are you saying it's 5%? Well, that is because your home loan is based on the reducing balance method. As you keep repaying your home loan principal and interest, the actual interest that you would pay keeps reducing, and therefore over the 15 years you would be paying only 5% per year on an average. Now let's say you have this amount as a surplus, 20 lakhs, and you invest elsewhere for the same interest rate, the published interest rate of 8.3%. So there you go. Let's calculate 20 lakhs at 8.3% for 15 years. And how often is it compounded? Bank deposits are typically compounded every 3 months. What I mean to say is the interest is added to your account every 3 months. So therefore the compounding happens every quarter. And what is the interest that you earn? The interest that you earn is 48,57,934. 48,57,934. Just have a look at this. You're earning 48.5 lakh rupees where you're spending just 15 lakh rupees. And what is the difference? It is this amount minus this amount. You're earning an additional 33,54,949 by not pre-closing or prepaying your home loan. Isn't that a massive amount? It is, right? And what is the interest that you're earning every year? Of course, it is this amount divided by the number of years, that is 15. You're earning about 3,23,862. And what is the average interest you are earning per year? Just like how we worked out the average year where you pay just 5% per year, what are you earning per year? So is equal to this amount divided by the invested amount into 100. 16.19% per year. You must be wondering how 8.3% became almost double at 16.19%. Very, very simple. It's the beauty of compounding. Compounding is one of the wonders of the world. When the more number of years you stay invested, the amounts you earn really multiplies very quickly, and you're actually in this case earning 16% per year. Now you may also ask me, hey, but no bank pays me 8.3% FD interest rate. They may be paying lesser. Well, yes, you are right. There was a time when banks were paying up to 8.3, 8.5% as FD interest rates. Now, of course, it's much lesser, ranging between 6 to 6.5. But there are still some banks who pay you 7% FD rates. Certain banks also pay you 7% on your saving account deposits. So let's assume you're earning only 7%. All right. So let's go to the same calculator, enter 7%, 15 years, and calculate how much interest you would earn. There you go. You're earning 36.63 lakh rupees, 3663, 632, 3663, 632. And isn't that more than double of what you are paying? Yes, of course it is. Let us see the difference. This amount minus this amount. Well, you're earning an additional 21 lakh rupees, and here you're earning an additional 33 lakh rupees. Isn't that wonderful? Once again, what is the yearly interest that you're earning? It's very quickly this amount divided by 15. And what is the average interest rate per year that you're earning? It is this amount divided by your investment into 100. It's 12.21%. Now, doesn't that make a lot of sense to keep your home loan repayments going? If you have additional funds, you should invest them elsewhere. Remember, I've just taken the worst examples of 8.3 and 7%. You could also mix it with equities, mutual funds, and certain other deposits where you earn more. And say you earn an average of 10%, then you would be earning far more. Apart from that, there is of course another benefit, which is the income tax deduction on home loan interest repayment. Of course, principal also counts for a deduction, but principal comes under Section 80C, which is only 1.5 lakh. So many salaried class people do not benefit much from it, but your interest is outside Section 80C. Maximum is about 2 lakhs for a self-occupied property. So let's assume you've bought a house where you're living in and you're paying interest on that. So if you claim 2 lakh interest per year, and if you fall under the 30% tax bracket, then you're saving 60,000 in a year at least. And of course, these are the other two tax brackets, 25 and 20%, where you'd be earning 50,000 and 40,000 respectively. Not earning, saving. But of course, when you say a rupee saved, it also means it's a rupee earned, isn't it? This 60,000 or 50 or 40,000 can be reinvested into another deposit or into mutual funds or whatever. This amount will be added to the annual amount, and that works out to a big saving. So, wasn't that very interesting to know? Yes, it was. And in my next video, I would be talking to you about why personal loans are not really so bad as they have been made out to be. In the meanwhile, I would once again request you to check out my website. This is my website, AshEka.in. And in my website, you could have a look at the About Us section. It's a small intro about me. Of course, the website is a very simple and straightforward website. There is also a section called Videos, where all my latest videos will be uploaded in one place, and even this video will feature here very shortly. And of course, you can click on the Contact Us page, where you could send us a message, and with your first name, your last name, your email, and I would get the mail in my inbox, and I would be very happy to respond to you quickly. Well, once again, thank you friends for watching the video, and thank you in advance for sharing this. Thank you in advance for subscribing, and thank you in advance for hitting the bell icon. This is Sandeep signing off for now, and I will see you again in another video very shortly. Bye bye.